Hello, this is Devin Roy, and in this episode, we're going to be talking about how loyalty can cost you. I want to tell 3 stories, each having to do with a different expense, and it's really not loyalty in general that can cost you, because loyalty in general is good. Loyalty earns you respect over time with certain people, certain organizations. A loyalty rewards program is a great example of how this doesn't matter. Sometimes loyalty can cost you. First up is car insurance. When I got in a car accident, it wasn't my fault, but my insurance still went up because I got a new car. I kept my same insurance agent on the same policy, and the rates still went up because instead of driving a 2006, I was driving a 2017. So it nearly doubled, and then doubled again when I moved from Massachusetts to Connecticut. I was paying between $350 and $400 for something that used to cost me $100. I decided, let's look around, because I lost my job at that point and I couldn't afford to keep paying it. I looked at Liberty Mutual, where I was at. I looked at Progressive, Geico, all these different places, and the best deal was Progressive because they offered an online discount, and my agent wasn't able to give it to me. I thought that was a little bit weird, but because it was online, he was able to get me every other discount except for the online discount. That's when I realized insurance is going to go up at the end of every policy. And I looked around too, and people were saying the same things at the end of every policy. Shop around. So if you can do a 12-month policy, do a 12-month policy. And it did go up since then, because it's been more than 6 months. My policy had time to renew, and I lost that first customer discount. Anytime you see that, you know they don't have your back. They're not going to reward your loyalty. In fact, they reward new customers, which is the opposite of loyalty. And that should be a red flag right away. This type of company doesn't deserve your repeat business, so you should probably shop around anytime you see a first-time customer discount. The lesson here is that car insurance will go up every single time it's up for renewal. And the tip is to get new insurance quotes every 6 months to 2 years. Next story, credit cards. Credit cards offer a lot of high interest when you're first building your credit. You need to be able to decipher what fees you should and should not pay. Just because your credit's low doesn't mean you should be paying certain fees. One of them is the annual fee. Anything with an annual fee, you should run far away from. Another one, and it's a little bit more hidden, is called the minimum interest charge, which doesn't sound like much on paper. $2 per month minimum is going to be your bill, even if you have $0 in your account, which, just like the annual fee, you have to wonder, why am I paying this if I'm not using it? That to me means it's unethical. It's sort of like how Planet Fitness gets all their revenue. They sell $10 membership, the lowest you can ever see around, and it's because 80-90% of people don't come to the gym every month, so they're making bank. It's wrong. It's wrong to make bank off people's laziness. You shouldn't respect that. You need to call up your credit card company, back to that. Call up your credit card company and say, I really don't want to pay this fee. In fact, I'm thinking of leaving because I have this annual fee, or I have this minimum interest charge, and I don't want to pay it. I think it's unethical. And the 2 times I've done that, they offered to waive the fee. I didn't know that was on the table as sort of a bargaining chip, but it is. So the lesson here is never settle for unethical charges. And the tip is, so once a year, cancel a card for bogus fees and charges, the one that you like the least. And if that's your longest credit card, that might hurt your credit history. And in fact, if it's one of your longest ones, even if it's not your longest one, it still will. But is it worth the $2 you don't have to pay? I mean, if you don't have a loan coming up, then I'd say just cancel that one. Don't give your business to that one. Look for a new one that's going to treat you right. My last story has to do with cable. The cable company, I believe it was Charter at the time, they had an internet streaming service, and I had already cut the cord. I wasn't paying for cable TV, and this streaming service was $20, which was $5 more than HBO, but I got live streaming TV. And also all the HBO stuff too, so I could watch my Game of Thrones. That's what sucked me in. When I decided to cancel it because Game of Thrones was over, they said, why don't you keep it and we'll give you the first time customer discount. And I thought to myself, okay, well, the first time discount is $20 a month and the service is $20 a month. Easy math says basically you're giving me the free streaming service, and I took it. And then I looked around, and it turns out a lot of times these cable companies have bargaining chips when you go to reduce your service or threaten to transfer your service. And the number one thing is that first time customer discount that they'll throw at you to keep you. And some people have on like a 12-month schedule, like an automated timer reminder of some sort that tells them, hey, time to renegotiate your cable bill. So those are my 3 tips, how loyalty can cost you and what you can do about it. If you found this video helpful, please like it, comment, or subscribe. I appreciate it. Have a good one.